All right, candle range theory trader back with you with a deep study on candle 4 of the candle range theory. So let's get into it. Now, for this to work, a couple of things that we have to put into place here. Okay, so obviously we have the traditional 3 candlestick pattern, 1, 2, 3. So we know that. How I trade is this: candle 2, the candle in the middle. I prefer that if I'm trading the daily chart, this candle right here on the daily chart makes the high of the week. Okay, that puts the odds in my favor. If I'm trading the 8 hour chart or if you trade the 4 hour chart, I prefer that candle 2 makes the high or low of the day, or for the daily high or low of the week. Okay, that's my filter for candle 2. I don't just trade random candle 2s. I like to require that candle 2 makes the high or low of the day or the week. Okay, so now that that's out the way, let's keep going. What we want to see is a continuation of price in the same directions with similar behavior to candle 3. Now, where should candle 3 close? Because obviously, when we talk about candle 4, okay, you already have 1, 2, 3. You're looking for candle 4 somewhere down here, right? So, where should the third candle close? There's two options that you have. Candle 3 can close above or below candle 2, or candle 3 can close above or below candle 1, the breakout. Okay, it breaks out of the range. What do I mean by that? This is an example of price breaking outside of candle, closing below candle 1. It really closes below both of them. But, it can either close below this candle or it can close below this candle, which in this case, like I said, it would be both. All right. But at a bare minimum, it must close below candle two's low if you want to see a continuation short, or above candle two's high if you want to do a continuation long. And we'll see some examples of this. If candle 3 does not close, if candle 3 doesn't close above the low or below the high, I hope I said that right, of the candle 2, it does not warrant a continuation, meaning that, let's say this candle 3 closes somewhere like right here above this candle's low. That we're not looking for a continuation on that one. Even if it happens, that's a no-go. Okay? That's a no-go. That's what I mean. So bare minimum, it has to close. It has to take out candle two's low if I'm going short. So here's an example of a real chart. And we see where candle 3 closed both below candles 2 and 1. All right. So when you see this 1, 2, 3, okay, even if you miss candle 3, okay, which is our ideal circumstance, we can try to take candle 4. So for this presentation, this deep study, candle 4, this candle right here, this is a daily chart, is going to be our focus. All right. So, but again, notice it closed outside of the candle range theory range. Okay. So not all candle 4s are the same. We're only going to focus on two types for this presentation: the straight drop, which is the best kind, or the retrace. Okay. So, but if you're going to do retraces or try to trade them, you need to determine your level and know when to stop. And really, the best way to know when candle 4 is really not going to play out, and I'll allude to this later, if it takes out the high of candle 2 if you're short. If price opens here and retraces all the way up and takes out this high, just don't bother. All right, just don't bother. Okay. So here's the straight drop candle for example. So we see this. This was the chart from earlier. This is on the daily time frame. But let's take a look at the 5-minute chart of this day right here. This is candle 4. Okay. So this is candle 4. Now for daily charts, I like to be done by like 1 a.m. Really, I'll try to take entries anywhere from 6:30 p.m. to about 10 or so. I'm not trying to trade 24/7. Okay. I'm really not. I trade at night and I trade at a New York session. I don't really trade London. I just don't. Okay, so this was I just figure like by 1 a.m., something needs to start shaking if I expect the entire day to move in my favor. It shouldn't take all day chopping around. Okay, so as you can see, price opened here, consolidated, dropped down, retraced, and then by 1 a.m., this vertical line right here, okay, that's where the 1 a.m. hour did hit. And then price started to tank after that. So that's my preference for the daily chart. Okay, but you can make your own. All right, but as you can see here, right in this window right here, you would have been fine to get in. This is before 1 a.m., maybe around midnight or so. Okay, and then price did tank. Now, if you missed the perfect entry on a straight drop, you can try to catch a fair value gap, okay, on a retrace. Okay, so what do I mean by that? Like right in here. This is after 1 a.m., obviously, but you could have got in right in here, maybe on this retrace right here where it was close enough to a gap, and a smaller move down here. But I don't like, I want to be in back here. I don't really try to trade down here. That's just my preference. Okay. But if you miss, this is a straight drop day. So, if you miss the best entry, try to get in on a fair value gap because you're counting on that momentum to hold. Now, the retrace candle 4 is as follows, because these are some of the tips. You can look for a retracement up to 15% or above into candle 3 around that level. Just draw a fib on candle 3 from the top to the bottom. But there's no guarantees that it's going to bounce off the 50. It just isn't. Okay, it's just a level that you can mark. Okay, well, there's nothing magical or mystical about 50% of candle 3. There really isn't. You can wait for the change of state of delivery off the higher low of the day or off the higher low of the 8-hour chart or 4-hour chart if you want to take that route, or you can use a fair value gap, up to you for entries. But there could even be an equal higher low with candle 3, but that's really not ideal. You really don't want to see the majority of candle 3 being taken out. Now, you can also use the rule of half. This is a timing rule whereby you want to stop trading by half the candle's time frame. So for instance, if you're trading an 8-hour candle, give it 4 hours to try to set up. Even if you want to check it, once periodically every 30 minutes or once every hour on the hour. But because we expect the candle to spend the majority of its time paying us, again, that candle should not spend most of its time consolidating. It just shouldn't. Okay, that's not conducive behavior to what we expect. And then daily candles, you can wait anywhere from 8 to 12 hours to try to see your setup. Again, you're not sitting in front of the chart for 8 hours. Okay, you can set price alerts. You can just check in on it periodically. When you see your setup, you just hop on in. Okay. Now, remember though, if candles 3 higher low is taken out, stop looking for the continuation. Okay, just don't bother. That's not what we're looking for a candle 4. Okay, so here's a retrace example. You have candles 1 and 2, the 2 green candles. Here's candle 3, okay, which goes below. Notice how candle 4 opens, wicks above 50%. This purple line here is 50% of candle 3. Okay, so it wasn't a straight drop. It was a retrace. It opened and then went up. So we got some green here before eventually it did tank and go down. All right, and then close outside the range. So let's go down to the 5-minute chart to see what this looks like. This is on the daily chart. Now let's take a look at our 5-minute entry here. So this is the 1 a.m. cutoff. Again, like I said, I try to be done by 1. I'm not up at 1. Normally I try to be in before that time frame. I know if I was trading this live, I know I probably would have got stopped out here because price did keep going. And then, no rule is perfect. As you can see, anyone who decided to give it more time could have got in after 1. And it did give a retrace right here and then before it tanked. I don't have the fair value gaps marked on these. I really don't think there were any until this move down here. But at the same time, anywhere above the 50% level would have been fine. This purple line right here is 50% of candle 3. Okay, so you take an entry right above it, right in there, you would have been good, and then you just enjoy all that downside there for the rest of the day. That's an end consolidation. Typically, you're going to see the day end in consolidation, which is why I like to be in the earlier part of the candle if I'm expecting the continuation. All right. So this pattern will fail. So we need to keep our losses small, because here's an example of a 1, 2, 3 candlestick pattern. Okay, this is candle 3. Notice what candle 4 did though. Candle 4 was straight solid green. Now, is it possible that you could have taken the high of this candle and maybe got some action to the downside of the next one? Yeah. But I'm not saying I'm not teaching candle 4 and 5. I'm really saying candle 4. This is not a short candle 4, okay? Now, candle 3, though, did close below candle 2's low. But again, this candle here was just a retrace. This is a daily chart. So you got one red day and then you just got one green day. Okay? Shorts really didn't get much price action here. So that's going to happen to you. Just be aware of that. Okay? I'm telling you that now. So let's keep going. Another example here. Here's another thing that we have to keep in mind. Not all candle 4s are going to break outside the range, especially if it's a sizable range. So notice here we have candle 1, 2, and 3. Okay, candle 3 closed above candle 2's high. So we can keep our long bias and try to look for continuation here. And then this blue line right here is just the high of candle 2. I do like to mark that just to make sure I'm on the right track. And then this is the trading candle right here. So let's take a look at our lower time frame here. And this would have been a 9 p.m. cutoff. I believe this was let me see if this was an 8-hour chart. Yeah, this was an 8-hour chart. So if we're talking about 8 hours, I want to be done half the candle, 5 to 9 is 4 hours. So by 9 p.m., if I'm trading the 8-hour chart, I want to be in somewhere. All right, so this was the cutoff right here, this vertical line. So entry off this low of the day could have got in either here or here on this green. And then I think this went about 40 pips or so. So not too much before it started consolidating. So again, and it didn't reach the range high. That can and will happen, just so you know. Now we also have the 2 candle 4. What do I mean by that? Every now and then, Okay. Every now and then, you're going to see the candle range theory where candles 2 and 3 are both in one candle, whereby you'll have a range candle and then the next candle both will sweep the candle's low and close above it. Typically, this takes 2 candles to do, but sometimes it does it in one. So I'm still going to say we're trying to trade candle 4 just for ease of use. I'm not going to say candle 3. I'm just going to say this is candle 1, candle 2 and 3 here, all combined in one, and then the continuation here. This is our candle 4. All right? Because it did close outside of the range. But the trick with this 2 candlestick pattern is that it must sweep only one side of the range candle and close above it. When it does that, then we look for the continuation. All right, so let's take a look at this candle right here. This is our candle 4 and see how that looked on the 5-minute. Now, from here, anyone who tried to go long over here was toasted, right? Because price spent the most of the day actually tanking and didn't reverse until the New York session came in, so around 9:50 or so. That can and will happen, right? So, I know some people probably they thought this might have been the low and got stopped out in this consolidation where you had a consolidation, a fake run up, and then price tanked again. But your bias is still good as long as, let me go back, as long as the low of candle 2 is holding. Okay, in this case, the 50% would have been a good level here. So, some of this stuff, you want to just play by ear, but this, you shouldn't see price opening and then go red and then go all the way back down here. You shouldn't really see that, right? Because it should eventually reverse. If it doesn't reverse in Asia or London, US is going to be like the last go round, because if it's getting to about 10, 11 o'clock, unless there's news coming up or something in the afternoon, I wouldn't look for this price or this chart to reverse like at 2 p.m. That's not really a thing. Okay. The odds of that happening are slim to none. Okay. So keep that in mind. So again, this was this chart play out right here. We had a change in state of delivery whereby the low of the day was made, and then price, it just made a W pattern, leg 1, leg 2, and then it went up some. So that was that. Here's another one here, 2 candle range theory. We have the range candle, then candles 2 and 3, which swept above, closed beneath. Okay, so then this is candle 4. So we're going to look on the 5-minute chart of this daily candle. And this one was a better one because it spent most of the day dropping. So you could have got in this one around 8 p.m., right? And then price just dropped away. Okay, and then again, retrace to the fair value gaps, and then price going down and continuing down. This dropped for 100 pips. All right, so candle 4s can give some good price action to the downside as a result of a continuation. All right, but again, that was at 8 p.m. And notice again how price swept the high, closed below, and then you just look for the continuation. That's it. While these can happen, they're not that frequent. So I wouldn't make a whole thing of just solely looking for this. And you may see this more often on the 8-hour chart than you will on the daily chart. Okay, so that's that. Here's one more where this is an 8-hour chart. So you have the range candle, the candles 2 and 3 swept above it, closed beneath it. Here's our candle 4. So let's take a look on the 5-minute chart. This was a great move to the downside. Could have got in anywhere from about 10 a.m. to about 11:20. This was, like I said, an 8-hour chart. Okay, 1, 2, and then this is our trading window right here. Okay, where you're trying to get in really for the New York session. So this is at 9 a.m. Price went up a little bit and then just tanked. So, that could have been a good candle 4 trade for you right there. So you have CRT options. I've done deep studies on candles 1, candle 2, candle 3, and now candle 4. I'm not going to go above candle 4 because, from then on, you may be either looking at trend or just consolidation, either one of those two, or reversals. I don't know. This is like this is it in the series, okay? So, but you have options. Candle 1, obviously, I don't trade because it's just a range candle. That sets up the move. Candle 2, while I did a deep study on it, I do not trade candle 2. It's too risky. I've lost more than I've won. I don't care to make that a part of my trading portfolio. Candle 3, without a doubt, is my favorite candle to trade. It's more predictable, and it has a hard stop against candle 2. Candle 4, I do trade those as well because it's a good plan B, because sometimes you're going to miss candle 3. You just will. Okay, like I said, we're not in front of the chart 24/7, but the good news with candle 4 is that if you miss candle 3, just trade candle 4. All right, okay. So, and candle 4 often plays out in New York, just so you know. So here's 2 candle 4s from the week that's going on right now. So this was a 2 candle 4. Okay, you got the range candle here, candles 2 and 3 right here. This is candle 4 right here. And as you can see, it trended down. It kept going down. This is an 8-hour chart. Right, so this is days of drop. Now, are you always going to see this though? No, I'm not trying to say that this is going to be the case 100% of the time. And as you can see, this candle here retraced all the way back up here, you would have to sit through some drawdown in order to see all that. So that's not how I trade. I'm not a swing trader. I like to get in and out. Okay, but this candle right here was a good candle for continuation. And then this candle right here is a good candle for because you have the range candle, candle 1, candle 2, and candle 3. So candle 4 gave awesome price action to the downside. I do like seeing where candle 3 does close outside of the range. I do think those moves are a little more powerful. So if I had a preference, it'd be that. However, it doesn't necessarily have to for you to see a good move to the downside. Okay, so but this was great. This was at 5. This was at 5 p.m. Candle 4. This is on the 8-hour chart. And I think this other one here was 5 p.m. as well. This was 5 p.m. Yeah. So that was that. Okay, so in conclusion, risk management is always number one. That's just a non-negotiable. Candle 4s are not guaranteed just because you get a candle 3. Okay, what I'm showing you will fail. I already talked about that. Okay, so just because you don't get a candle 4, that doesn't mean the CRT doesn't work. You just didn't get it for that day. It is what it is. Decide which is the best setup you want to see. A close outside the candle range theory, candle 1, or if you just want to focus on price closing below candle 2 or above candle 2. Either way, or you can trade both. It's up to you. You know, it's your trading deal. You do what you want to do with that. Do not give candle 4 unlimited tries, okay? Because you may be trading against the trend. Okay, you need to have a plan. So maybe you want to have like 2 tries, one in London, one in US, I don't know, or maybe you want to give the entry 20 pips or wait till it gets to halfway of the candle 3. Either way, but my goal is that I'm trying to tell you that you need to have a plan before you come to the charts and stick to that plan. Don't get emotional. Don't get caught up in revenge trading. Just stick to your plan. And if you lose, you lose. But try to survive to trade another day. Okay. Now, a retrace into a fair value gap that was made in candle 3 can be a good sign of a entry point. So you want to use that as a guidepost because they should hold. If momentum is to the downside, we'll just say right here. If there was a fair value gap somewhere in this range of candle 3, it should hold as price goes into it and then goes down. I hope that makes sense. So any fair value gaps in candle 3 on the bottom half, when price opens and continues down, that's what you want to see. So if you want to see a fair value gap in candle 3 and use that as a guide for entering for candle 4, you're more than welcome to try that. And then once again, risk management is always number one, not trading. Okay, if we, okay, me included, obviously, cannot master how to manage risk, at best you'll get lucky from time to time, but that's about it. You're not going to make a career out of trading. Like I said, you'll hit some home runs every now and then, but for the most part, you're going to lose more than you make. Okay, risk management is just number one. I cannot stress that enough. And I'm talking to myself here and anyone else who's listening. Okay, managing risk is what's going to get you paid. Period, point blank. So I appreciate your time and attention. Thank you so much for watching the video. That is the last deep study for the candle range theory, candle 4 continuations. Hope you got something out of it. I'll put the links to the other deep studies in the description. Thank you for watching. Have a great rest of your day.